Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It's Teaching Tech Tuesday. Let's take a second look at time frames. I get this question a lot. On altcoins because newer traders especially think that they need to be trading. That's what a trader does, right? A trader is constantly looking for opportunities on all time frames, trying to figure out what's going on. I say nay to that, especially on a day like today, on election day, when everybody is all hyper-focused on the event, just like they were for the merge, just like they have been historically for Bitcoin halving, for any election period, any key event that everybody is aware of and knows about, FOMC every couple months or every month historically, whatever it is, right? It's always important to have a high time frame view. If you cannot establish a high time frame view on a altcoin or whatever, then it's going to be very difficult to really have a strong sense of direction. This obviously works best with trend trading and chart pattern trading, breakout trading. Without those two options, I don't really understand how people trade and make money, because trend trading for me has definitely been the difference, as has figuring out chart patterns. But back to timeframes, my personal preference, daily, weekly, all the time. What does the weekly look like? What does the daily look like? That's what you see me focusing on. For most people, we sleep and wake up. Generally, our timeframes are daily. Markets historically have closed every day and reopened the next day. So that kind of sets that time frame, even in crypto, which is 24/7. But for the most part, you're going to find that your higher time frame trades are going to be where the money is made. And I will highlight 4 such trades from a video I did a year ago that only has 800 views. Okay. Now, a year ago, we were talking about a lot of stuff, to be fair. And we talked about these trades many times, not just in that video. But I thought it'd be interesting to take a look back, considering we're talking about timeframes today. It's really the most important, not necessarily to have a view on the daily or the weekly, but to really understand what is the speed of the market. The speed of the market today around the election might be ultra fast. It might be fanatic. It might just be like all over the place, right? But you still need to have that weekly view, that daily view outside of the noise. And it's like using a telescope or microscope. You're trying to zoom in, zoom out, trying to see if there's anything to see on trend, on breakout potential, that sort of thing. Higher time frames always win. When in doubt, zoom out. Again, this is going to be a problem for people trading alts or focused on freshly listed pump and dumps, whatever you want to call them. That stuff, you're not going to have analysis for the most part that's going to make sense. So give me a year of data, give me 5 years of data. I mean, the legacy folks, they want decades of data, right? We don't have that in crypto, but we certainly have several years of data for most of this stuff. And always, what is the direction of trend? What is the strength? What is the speed? I'll talk about the examples from last year, but they were dead on the money. Okay. Now, it's not always going to be accurate. It's not always going to give you the best trade at the end of the day, but you're trying to set yourself up for success. If you're the salmon swimming upstream every trade, you will die. Okay. You need some sort of tailwind most of the time. You need the stream at your back. You need the wind at your back. Very small amounts of people do very well only contra trend trading. And I've seen them and listened to them on the macro side at this point for at least 3 years, where they've called for end times over and over again. And they've just been wrong this entire time. They've just been wrong. And that's it, right? You don't make money if you're wrong most of the time, if you trade on ideas that are wrong. Depending on leverage, sizing, risk management, that will also help inform time frame. But generally, you want to set yourself up for success. I would not look at the weekly and then open 100x long thinking, man, right? I'm so cozy and so comfy. What could go wrong, right? It's much easier to stop living on the knife's edge and bump that leverage way down, or just sit in spot and wait. If it looks good on the weekly, you got to give it time, right? You got to give it time. The time frame agnostic line is mainly regarding pitchforks, and that's sort of outside of this time frame analysis stuff. But the 4 trades are Bitcoin on the weekly. This was last year, right? This isn't like we were waiting years and years for this. This was last year. Bitcoin was at 28K. This is all in the same video, by the way. Bitcoin at 28, ETH BTC at 0.55, freshly out of the weekly cloud, below the weekly cloud. In this case, this was an edge to edge that many of us caught, many of us were talking about for a very long time on the weekly. Sol at 24. Sol at 24. This is the 3-day cloud, right? We are zoomed way out on this stuff. We are looking for trend reversals, trend shift type of behaviors. In this case, for ETH BTC, bearish continuation. And then the last one was on gold. Gold was at 1923. I was talking about the cup and handle. None of this stuff is a secret. Everybody was talking about this. And that's the benefit of looking at the high time frames. It sort of gets the whole market on the same page. If there's an obvious trend, an obvious chart pattern, generally most of the time, most of the market will be with you. Now you could say, well, that sets you up for a crowded trade. Yeah, sometimes it does. But if you're telling me Sol at 24 on the long side was a crowded trade, right? It might have been, but where are we today? You know, we're much, much higher. Before I go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro at the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures, Inc., PBI, DBA, and Kraken. So if we fast forward to today on the weekly, when people ask me about backtesting, this dynamic of living through it, forward testing, seeing it happen, that is a much more powerful dynamic to me than backtesting. Obviously, you need to know historically, has this indicator or this time frame made any sense for this asset? But seeing it and living it and trading it is a whole different experience where you have all of a sudden you have muscle memory, at least for me. Next time I see anything that looks like what we saw in October 2023, I know what to do. And I know that the weekly is definitely a very important time frame. This was 2 elections ago, November 2020. Same story. Where are we here? We're above the cloud on the weekly, right? I would be much, much more bearish if we were in the cloud or below the cloud. That's a different story entirely. But as we sit here today, that is bearish. If we zoom way back to 2016, same story, above the weekly cloud. So based on the trend metrics that for the most part have been on your side here, assuming you're bullish, we can look at the daily and we can pay attention to the 4-hour and the 8-hour, and we can look at the RSI on that and whatever else. But you definitely need to have a weekly viewpoint and just think, okay, what is this? What does this look like? Just, you know, broad strokes here. We're above the cloud, fully bullish. We've got a cup and handle, massive pattern potentially playing out. That's it, right? There's really nothing else to say. Now we can say, well, maybe this is setting up for another double top, blah, 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 election, blah, 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 ETFs, unlocks, whatever, right? We can make up excuses, but that is not what technicals are showing, at least for me. Again, different story if we are in the cloud, below the cloud, not the case for BTC. Do I know that this is going to rally 100%? No. Do I know that in a year from now I won't be disappointed listening back to this video? I don't. But all I know is we are in a spot based on the trend metrics that is bullish. That's it. Full stop. ETH, same thing. EPTC. That video was somewhere in here. October, yeah, down here. When you start to break below a high time frame cloud, that is a very, very bearish signal. Does it guarantee what we've seen here? It doesn't guarantee anything, but it gives you a heads up that, hey, this trend is in trouble. Now, we don't have to use the cloud. We can use whatever you want. Here's the 50-200 cross. Same story. Below the 200 week, no bueno, bearish cross, still bearish. And this remains bearish and will remain bearish so long as it's below the 50-week moving average, so long as the 50-200 is bearish. And you can see the eventual cross previously was the top. So backtesting would tell you, yeah, maybe don't pay attention as much to the cross versus prices above the 50-week moving average. And that gives you a sense of how bearish this really is and how bearish this has been this entire time. Because I know a lot of people who just are in complete disbelief. This is the importance of paying attention to a high time frame trend. Sol certainly outperformed. Now, did anybody think Sol could go to 150? I don't think so. I really don't think so, because even if you, we'll delete this, even if you measure this initial move, right? This gets you basically to 50. Here was the inverted head and shoulders down here, that gets you to 50. Maybe if you measure this gets you to a different target, which is actually higher than where we are now. It tapped the 210, 1618, 455. But again, this is the power of looking at the high time frames, is that you're just looking for anything obvious. We're not trying to like force anything here. We're not trying to force multiple inverted head and shoulders fractals. It's just like, okay, what does it look like in an obvious sense, right? Is it ever a guarantee? No. But when you're getting a bullish TK cross, price above cloud, bullish cloud for the first time in months, a year and a half, 2 years, that is a big deal for anything. And that just goes to show you the power of the cloud. So where is Sol USD now today? It looks good on the 3-day. It tried to break the range, couldn't. It tried to break below the cloud, it couldn't. And it's trying to hold above the cloud with a 3-day TK bull cross. So it looks fine. You know, it doesn't look super exciting here, and it doesn't always have to look exciting, but it's certainly based for many months and looks ready to go, just like BTC. And yes, it also has this cup and handle, right? That's just the most obvious thing that you see here. Throughout this journey, I've talked about this head and shoulders possibility. That's really been negated at this point. We've talked about multiple lower time frame, inverted head and shoulders, that sort of thing. We can also just measure this range and say, okay, the range break brings you to basically 300. Okay, right? I wouldn't take it any further than that. If you're bullish Sol and you think it's going to 300, maybe you put that in your high time frame allocation bucket and you just wait until it breaks the 3-day cloud or the high time frame cloud or whatever your stop loss is. You just sit on that and you wait till it hits 300. And then finally with gold, you can actually trade this through Kraken. PAXG, this was the handle of a cup and handle on gold. It's great to look at gold just to realize how slow the legacy stuff moves, especially outside of crypto. You know, crypto, we're just used to this like dopamine hit factory constantly in our face. But gold is a good one to practice on because it is so slow, and to even just paper trade it to say, okay, what does it look like today? What did it look like before the breakout? Where would I take profit? How would I have measured this? We are well within the expected move of the cup and handle thing that this made, right? Again, is it pretty? No. Is it textbook? No. Is it not there? It's definitely not there. It's definitely there, right? This is more of an art than a science. But we're well past the measured move on PAXG. Now, it may look different on GLD or XAU USD, but up here at this point, yeah, I would be taking profits if I was looking at the weekly time frame. If you're looking at the daily, it might be a little different story. But to me, the best risk reward on this was definitely based on the weekly. So just to quickly recap, you always want a high time frame view, and you always want to stay trading on the side of that high time frame view. If you're bullish on the weekly and bearish on the 4-minute chart, okay, that's just, it doesn't really make sense because most of your gains are going to come from high time frame viewpoints. For me, I've noticed the lower the time frame I go, the more it feels like gambling, the more it feels like a coin flip. So if you can't establish that high time frame view, it's probably a sign, size that down, or just don't trade it at all. Or just see how it works with the system. You know, some alts trade very well on low time frames. And one thing you definitely don't want to do is have a viewpoint on the high time frame and then do something completely the opposite on an ultra low time frame. Very few people can do that successfully, you know, but depending on your allocation buckets, I could see a world in which people do well trading multiple time frames. That's all I have for this one today. Like, dislike, comment, share, subscribe, and happy trading.